Welcome everyone to another episode of Financial 15. You can see Kevin and I are ready to go, and today we're going to tip our toe into cryptocurrencies. So much to tackle there. This is only step one. We're going to have future videos that go in more detail. Today we're trying to answer the question, what is a cryptocurrency? We're going to get into a few of those details. You want to stick around.
Yes, what is cryptocurrency? An introduction today is what we're doing. Remember, you can find all the information that we're putting out there on our website at beckerorr.com, or subscribe to our YouTube channel, or like us on Facebook. That will give you access to everything that we're dealing with and all of our original series. Clint, why don't you start us off? Give us the introduction, should I say. What is a cryptocurrency?
That's what we're dealing with today. We're dealing with step one. What is a cryptocurrency? And very high level, and talk about cryptocurrency, you need to understand the technology, you need to understand blockchain, and a great way for this to work out to understand it is to think of an analogy, Kevin. And I think a common analogy is that of the Byzantine general. Do you want to walk us through what we see on the screen here?
Yeah, basically with the Byzantine general scenario, it's getting all the generals to work in a coordinated effort. I mean, a lot of systems are decentralized. You've got some that are working for the castle. You've got others that are not working for the castle. And this is the normal environment that we live in today with our banking system and financials. And by having that, it's sort of all over the place. In the way of cryptocurrencies, it's a coordinated attack. Every general has been contacted. They're all on the same page. Everybody has to approve what's going to go on for the castle. And that sort of a movement allows us to have a more secure system and allows us to be able to protect our own castle going forward. Sort of a brief description. Do you have anything to add on that one, Clint?
Yeah, it comes down to communication, right? You have all the generals surrounding the castle. The only way they're going to be victorious if they're all on the same page, they all attack at once. If you get people doing different things, it will not work out. And how to solve that problem, to get that instant communication, everyone on the same page, that's what blockchain does. It tries to solve that problem, the ability to communicate with all of them at once and make sure the whole network is on the same page. So high level there, that's what the blockchain does. That's the technology that's kind of underneath all cryptocurrencies. We're going to now apply that to the most common, the most popular cryptocurrency, and that, of course, is Bitcoin. In Bitcoin, Kevin, started in 2008. It was a white paper, a large paper with all the details in there, and it was started by Satoshi Nakamoto. That's not an individual person. That's actually just a pseudonym. It could be a person, could be a group. We actually don't know who Satoshi is, but that is the origin story for Bitcoin. And like you said, it's a blockchain. It's a public peer-to-peer distributed network, meaning it's not a private network. Some of those exist, private blockchain networks. Not the case here. Public peer-to-peer. It is fully distributed. You have that decentralized ledger. What do you want to add to that?
Yeah, I mean, basically that's the main sort of scenario. Bitcoin is it's a public scenario. It's not private, that we have to know. And it is very secure because, as we know, we mentioned the Byzantine general scenario, everybody has to be on the same page to approve what's going on. Now, the chain contains details on every single transaction on the network. And what we mean by that is that, you know, if we took a look at somebody who writes a check, if I write a check to you and you don't deposit it or put it in your ledger, I know what I've done, but I don't know what you've done. In the case of Bitcoin, for that, every transaction on the network, everyone on the network has to approve it to make sure that it works its way through. So that's another important step to know, that the security and what Bitcoin does. But there's so much more that they go beyond that one. If we start taking a look,
there's a lot more to cover there. We'll get to the next slide, but quickly here on the decentralized part, every computer connected to the network here, they have to verify every single change. So you can't just come along and change one of the nodes or one of the blocks in the blockchain. Any change has to be approved by all of the network. That's why it's so secure, is that everyone's on the same page. And then a few more quick tips here. How do you get those blocks? Well, they're mined. If you had gold, for example, we got to dig it out of the ground. We have to mine gold. Same thing here with Bitcoin. We have to mine it, but it's a digital currency, so our mining involves computers. You have computers that are competing to solve these complex problems. They have to solve those equations, and when they do, they're rewarded with Bitcoin. Similar, if you get the gold out of the ground, you're rewarded. You now have the gold and you can go sell it on the market. Same concept here. You're rewarded with Bitcoin, but the amount of Bitcoin you get, Kevin, it changes, doesn't it?
It changes all the time. But I mean, before we get to the changing on that, one thing to mention on this is, if you're mining Bitcoin, I can't do it at home with my laptop. The computers that need to solve this, it is huge amount of data. It is huge rooms filled with servers that have to solve these complex problems to be able to get the mined gold. So if you think that you can just go on and, I'll mine myself some Bitcoin, not going to happen. Most of these are groups and everything else that go. But yeah, as one of the rewards are listening, they have cut what you did. Originally, when it was out there, you got a certain number of Bitcoin when you solved the problem. Every 4 years, approximately, they have that. So if you were getting 10, 4 years down the road, it'll be 5. From 5, it'll go to 2.5. From 2.5, it'll go to 1.25. And again, as we mentioned, it's because there's only a limited supply that is out there of Bitcoin. They are only going to issue 21 million Bitcoin total. And right now, as we see, we're about 90% done. There's 18.75 million of them that are out there that have been mined already. So that's, again, why it is such a small supply. Basically, if you take a look at it, it's secure, and that's why it becomes such a valuable commodity moving forward, and why we're dealing with Bitcoin as it is and why it's as popular. But even though we mine that much, where would we be on the overall map for where Bitcoin is?
It's going to take a while. This is courtesy of CoinDesk. You can see the yellow line on the screen there. That's the reward that you get for mining the Bitcoin. It started at 50. So there was a time where you'd mine the Bitcoin, you'd solve all those problems, you'd get 50 Bitcoins. And then it got cut to 25 and then 12.5. Right now we're at the 6.25 stage. You can see that yellow line just continues to go down roughly every 210,000 blocks, which is approximately every 4 years. The black line is the supply. And I'll move my cursor here. You can see we're at about that 18.75 million range. It only ever goes to 21 million, but the pace of growth in supply is quite small from here on out. It's expected to take all the way to about 2140 before they get to that 21 million. So that's part of the reason, folks, if there's a narrative to say, why do we have to own Bitcoin? Often that narrative includes limited supply. So unlike a fiat currency where the central bank can simply print more, not the case here. There's only ever going to be 21 million Bitcoins. And that's part of the reason why folks would own it, right, Kevin? Do people want this for that store of value? Or are people looking at this saying, hey, this is a currency, I'm going to go use this to buy myself a coffee? What's the real use case here?
Well, the use case is more if it's a stored value, because, I mean, the price is so high. I mean, if you're looking at $50,000, $60,000 for Bitcoin, you're not taking that and going to Starbucks and saying, look, I want my $2.50 coffee. It's just not going to happen. It's become more exactly like gold. Why do people own gold? They own it because it's got what is known as an enhanced stored value to it completely. So gold is worth $2,000 a share. Everybody's holding that because of it. It's the same sort of scenario that we're finding with Bitcoin. People want to hold it because it's a stored value. It's not really practical for small purchases or anything along those lines. But there's got to be more to it than just the stored value.
Yeah, that's right. At the moment, it is the stored value, and then not just the practicality of the large dollar figure, but also the practicality of it. You got to get every single network computer on that to approve the transactions. The amount of energy required to approve like a $5 purchase or just to go out for a meal for lunch would be significant. So it's really not practical from that sense to do a small transaction. So in terms of using it as a currency, it doesn't really work out. I agree with you, the store of value, that limited supply, that's often what people look for. But there's more to the cryptocurrency world than Bitcoin. Bitcoin certainly is the biggest, but there's a lot in that crypto space. You can see on the chart here, I did this using the data from coinmarketcap.com. I did this on May 15th. The reason I'm highlighting the date, if I did it again today, the numbers would probably be completely different. There's lots of volatility. Bitcoin was over $1 trillion about a week ago. Now it's at 900 billion. If I did it again today, could it be even lower? And also the number of cryptocurrencies out there continues to change. People think, oh, there's Bitcoin, maybe this thing called Ethereum. There's actually about 10,000 different cryptocurrencies, and there's more of them coming every single day. So you can see Bitcoin's got the biggest market share. Ethereum is number 2 there. Then you have Binance Coin, Cardano, Doge. You got Tether, Ripple, Polkadot. That rounds out the top 8. And then that other category, there's 9,827 in that other category as of May 15th. So it's a whole world when you get into cryptocurrencies. It's certainly much more than just Bitcoin. Anything you want to add to that, Kevin?
Yeah, no, I mean, you basically mentioned it perfectly, is that it's not just one. Everybody thinks of cryptocurrency in the words, they say, oh, well, cryptocurrency is Bitcoin. It's not. It is a variety of different options out there. And as you've mentioned, the price swings, there is volatility in this, people. You have to know that. Just because we're showing Bitcoin at 900 billion today, you take it 3 weeks from now, it could be 700 billion, or it could be 1.3 billion or 1.3 trillion. All we have to know is that the volatility is there as well. And again, it's not just one. There's 10,000, there's 11,000. They're going to continue to grow for a while, and you're going to have a variety of different Bitcoins there. There are comparisons that we can use for this, though, aren't there, Clint?
Yeah, one we talked about just before we started recording here was using the comparison of the internet in the 90s. And I think that fits from multiple levels. We'll actually get into that a little more in another video. But the idea here is when you had in the 90s the dot-com bubble there, and everything was .com, right? There's pets.com, there was amazon.com, everything was .com. Everyone was connected to the internet. You had tons of companies, not just one or two big ones. Same thing here. You've got tons of companies, tons of cryptocurrencies all competing in that space, all trying to get a piece of some of that cryptocurrency action. How that all plays out, we'll have to wait and see, but the same idea. You had so many internet companies all trying to get onto the internet, use it, incorporate it in some way, shape, or form. Same thing in the cryptocurrency space. You got over really about 10,000 of them now, all trying to be a part of that cryptocurrency space and find different ways to use it and find new applications for it. Would you agree?
Yeah, I would. Exactly. I mean, just taking a look at it, it's the same sort of thing. You're going to get some of those that are going to come to the forefront of the entire thing. As we've known, roughly 2/3 of this space is lifted up by Bitcoin as well as Ethereum. And that's probably the next place that we should go is Ethereum. It's something that we have to talk about because Bitcoin used to be the only one known. Now Ethereum is more well known. They have places that you can buy Ethereum and stuff along those lines. Why don't you give us a quick description on what Ethereum is, Clint?
Yeah, Ethereum, well, first it started in 2015, so we're talking 7 years after Bitcoin here. Differences in the blockchain. So keep in mind, the blockchain is the technology that is underneath the cryptocurrency, but each cryptocurrency can have different protocols for their blockchain, and that's the key here for Ethereum. Open source software, and in their protocols, it permits smart contracts, and that's key because those smart contracts allow for a whole host of different applications on the Ethereum blockchain. I'll pull up a slide here, Kevin. You can see they've used it for pretty much everything. They built a whole financial network on the Ethereum blockchain.
Yeah, I mean, basically what we look at, I would always compare this to being actually, whereas Bitcoin is listed as very close to gold, a stored value, a single sort of entity, and this is what you're using it for. I look at Ethereum more as Ethereum's the bank. They can do lending. They can deal with derivatives. They deal with decentralized exchanges. There's a variety of different applications that Ethereum can apply off their blockchain that you're not finding on Bitcoin or some of the others. Yeah. So each one has a little bit of a different scenario, but this is what Ethereum tends to be. And like I say, I use it more as a banking comparison. And as you can see, it tends to be doing fairly well in different spaces going forward.
Yeah, and the dollar figures there, this was done in May of 2021, so recently. But you can see there's already tens of billions of dollars using that Ethereum blockchain for a multitude of applications. So there's a lot of people already on that Ethereum blockchain using the decentralized finance. The last topic we got to touch on here, Kevin, is stablecoins. I know we're trying to cover a lot in one video, but to hit the highlights, you got to understand the blockchain technology. You got to understand the big players, Bitcoin, Ethereum. And then lastly here, stablecoins. It addresses that volatility issue. We talked about cryptos can go all over the map with the volatility. Stablecoin tries to peg it to another entity. Often it's pegged to the US dollar. So a stablecoin, if the US dollar goes up 1%, stablecoin goes up 1%. It just mimics the movement. So it takes out a lot of that volatility. The most popular one is Tether, about 58 billion of market cap there. The total space is probably in that 90 to 100 billion of stablecoins. And the idea here is you got something that's pegged to a fiat currency, so it's a little less volatile, but it's still on the crypto rails, which means it's a 24/7 market. It means it's very efficient. It's not nearly as costly. So if you have Sunday morning at noon and you got to send $100,000 to someone in Europe, it can be done almost in an instant, just like that. You don't have to wait for the bank to open. That's the whole use case behind stablecoins. Cut out some of that volatility, still have the efficiencies and benefits of the crypto space. Anything you want to add, Kevin?
Yeah, no, you mentioned it really well there. I mean, stablecoin is becoming more and more of an acceptable play because you can do transactions so fast and you can do it on that 24/7. And as you mentioned, we have covered a variety of different things. It is a huge space that most people don't realize. They always look at cryptocurrency and they associate cryptocurrency and Bitcoin, and that's about it. But it is just the beginning for where everything is. As we get further in, now that we've sort of described what cryptocurrency is, we now want to let you know how to invest in it. That is going to be our next video, something that you need to tune in to see so that you can get involved in this. Because as I say, the biggest thing for this, like the internet, as you mentioned, if we get worldwide acceptance of it, it will become there and it will be growing and growing. And you do want to know exactly what this is and how to be a piece of that from there. Other than that, I think we've covered sort of the basics. If you do have any questions or concerns, please get in touch with us at Chat with Clinton and Kevin. We are more than happy to answer the questions that this will spark, and we know it will. But other than that, I think that's covered most of what it is. Any final closing comment?
Absolutely, Kevin. You did it well there. Today was an introduction. We just dipped our toe into the cryptocurrency pond. The water's warm, so we're going to jump in and go for a swim in the future videos. You're going to want to stick around for those. Take care.